Hello guys, welcome back to the next learning video. So here we'll learn about options buying. Okay, a very fascinating subject in stock market trading is options buying. Because of the immense opportunities this specific instrument presents itself to us. Okay, I mean, this learning video, I'll restrict my discussion specifically to options buying. Okay, what exactly we need to do, what we are not supposed to do, how you are supposed to train yourself to participate in option buying trades. Okay, it's very important for you to understand the importance of the time cycle period of becoming active to be an options buyer in market. Okay, you need to learn the importance of when to participate and when not to participate and put your money in options buying. Okay, before I proceed further, I'll go to the cash charts, right? Because this is a basic approach which all of you have to understand, specifically for those who are new to markets, who are new to options trading. Okay, you need to know that options is a derivative of cash charts. Okay, the main value will always revolve around the cash chart of any stock you wish to trade or index value you wish to trade. You need to correlate the options movement along with the cash movement. Anyone who is keen to participate in options trading first should develop the ability to predict the price movement on cash charts of any stock. Okay, now when we talk about stock trading, now I'm having a chart of Bajaj Auto. If I want to trade in Bajaj Auto, say on a buy side, I should first have the skill and ability to predict the price movement on cash chart from where the price can move until what level the price can reach. Okay, before this movement comes, you should be able to predict, okay, this is the price from say 8,000 levels, it can reach 8,500 levels. This is the prediction, and I want to trade on a buy side. Okay, so one is the direction, and second point is the time factor. This performance of trade has to come within a specific time, within the shortest possible time. Only when a bigger move comes in cash chart, you will be able to make money in options. If the price remains sideways, okay, range bound, then you will not make money as an options buyer because the premiums in your options will decay and decay. Okay, make a note of all these points because gradually I'll start interrelating all these factors to help you understand. So first point is you should make all your analysis only on cash charts. Maybe if you want to trade on a buy side, you will be trading in CEs, that is call option. If you want to trade on sell side, you will be trading in put option, PE buy trades. Right? So this is the basic knowledge I hope every one of you have before you start option trade. On a buy side, you trade in a call option. On a sell side, you trade in a put option, that is PE. Anyone who does not know or does not understand the movement on cash chart, guys, I'm telling you, it's definitely not your business to enter option trading. Do not enter option trades at all if you do not understand the price movements on cash charts. You are not supposed to trade in options if you don't understand price on cash charts. Okay, it's a disclaimer, and it's a very serious instruction from our side to anyone who is at a stage who does not even understand the cash chart analysis of any stock. Only those who can understand the movements of cash, who have practiced well on all the trading concepts we have taught, only such individuals can participate in options trading, because you will know the risk and the reward also in every trade from your entries. See, now, as you know, options will not have any specific value. It's a derivative of cash chart, right? See, in cash trading is easy. You want to buy a Bajaj Auto share and capture the move from 8,000 to 8,500. You want to capture, say, 5% movement in this. You want to do in cash. Okay, as of at this level, Bajaj Auto share price is 8,000. So if you invest 80,000, you will get 10 shares of Bajaj Auto, which you can add in your demat account. And whenever the price moves up, it gives a 5%, 10% up move, maybe in 5 days or even 50 days for that matter, or even 6 months. You can hold it in your demat account and sell it whenever it comes into profits. Even if there's a fall in market, it goes down, it goes into negative value, you can still hold it till the time it reaches into a positive side and then exit in profits. That you can afford to do in cash. There'll be no expiry or time limitation to trade in cash by holding in your demat account if you want to take buy trades. But the same does not apply for options trade, right? Options, first point is options runs on premiums. If you want to buy a 8,000 call option at these levels and you want to capture these profits, so let's assume 8,000 CE of Bajaj Auto has a premium of 100 rupees, which is having a lot size of 125. So 12,500 will be your investment. Now, guys, remember, whenever you invest money in option trading, what will be the risk? The risk will be, worst come worst, risk will be the entire premium. This is how you have to consider. Whatever the investment specifically for swing trades, okay? If you want to invest money in options for a swing trade, that is, you want to invest and hold it for a few days, hold it for 2 days, 4 days, 1 week, the entire investment will be at risk. So if you invest 12,000, 12,000 will be the risk factor. If you invest 50,000, 50,000 will be the risk factor. Okay, mentally you have to prepare yourself like that. Yes, although we will keep stop loss and cut this position at certain losses if trade doesn't perform in our expected direction. I'm saying in extreme cases, if market opens big gap down, which may lead to the erosion of entire premium. Still, worst come worst case, what can happen? This can become zero. This is the mental preparation what you need before you venture out into options trading. Okay. Now, when you invest 12,500 and if the trade performs within say 4 or 5 days, okay, or 2 days, within a period of say 2 to 5 days or 2 to 7 days, the trade performs, gives a 5%, 6% up move. This 100 value can go up to 200, 250 plus. And for an investment of 12,500, you may end up earning another 12,500 to 15,000 rupees as a profit if it performs in your expected direction. So in options trading, one is the trade has to perform in expected direction, and the trade also has to perform within a very short time frame. That's most important, because these premiums, okay, option premiums have an expiry date of every month. It's a monthly contract. Options trading is about monthly contract. You trade in March month. March last Thursday of every month will be the monthly expiry, and the trade has to perform within that month itself, maximum. And we definitely cannot take entry on first of a day and wait for all 25 days or 30 days of a month. Okay, even in that scenario, you will not make money. But ideally, you should be able to get the required movement within 2 to 7 days on an average. That is when you will be making money in options trading. Clear, guys? So most important point, all analysis to be done on cash charts. All trade analysis, projection, forecasting for buy or sell to be done only on cash charts. After you understand the cash chart analysis, then you can participate in options trading accordingly. You can select whichever strike price you want. Okay, at the money option or out of the money option based on traders' risk appetite. You can choose a CE option for a buy trade or a PE option on a sell trade and execute your trades after you understand the significance of cash chart analysis. This is the first point. Without understanding cash chart analysis, anyone messages us, reaches out to us saying that I've taken a trade but made loss, and we come to know that you are not understanding cash chart and you're just ventured, we will not entertain such candidates for any learning or training or any hand holding for that matter. Okay, so please be clear, we are strict on our rules and approach in trading. Now I'll come back to the main subject. Okay, guys, these guidelines and disclaimers are very important because we see a lot of people do these mistakes, and hence we definitely take some time out to lay some guidelines to make sure people are serious about money. Okay, we don't want people to be reckless and waste money unnecessarily. Okay, now for options buying, guys, you need to understand all these points. See, first of all, any month begins. Okay, now say we are in month of March. At the beginning of March, say from March 1st to March 5th, you will see more than 50% of strike prices in options will not be active at all yet. Even if you want to enter option trade, you will not be able to do so because more than 50% of stock trading options will not be active on your option chain. They will be illiquid. You will not be able to trade. They will not move. So first of all, you have to wait to begin your option trading at the beginning of month. Most of the trades you will be able to participate after 5th, after 6th. That is when option buying will start. There also you will have to start very slowly, because at the beginning of month, premiums will be very, very high in options. It is only towards mid or end of the month that options will really start becoming liquid and we can start trading fluently. So first, we need to understand that the frequency of option buying trade will start and increase from second week of every month. This is to be followed month on month. From third week, we will start little aggressive trading. And fourth week will be the best to trade even more aggressively, as premiums will be very, very less and multiple traders will have the advantage of taking more number of lots in very less premium. This is exactly how you need to have an approach in options trading. Most of the traders do opposite of this. At the beginning of month, they invest in options and they wait for entire month, entire 20-25 days to see money in their trades. That's not going to work out. The entire retail market, when I see, they do just opposite of all this. Whatever I'm teaching, they just do opposite of all this. That's why they don't end up making money. And guys, also understand, you would have seen regular disclaimers from SEBI and a lot of places that 90% plus people make losses in trading, correct? 90% plus people make losses. And options trading, 95% plus people make losses. Why does this happen? Because there's no systematic approach from their side towards trading. And to address this issue is exactly all the guidelines which I'm laying down here for you to understand, practice, and implement methodically, systematically every month. Option by new traders can definitely stay away from option buying for first week. Totally stay away. Okay, you can start light trading light from second week. See, why do I say this? I'll give an example. Now, today, if you want to buy a trade, okay, today, March 2nd, if you want to buy an options trade on a buy side or a sell side, let me show you. This is a BPCL chart. It's there on my buy watch list as a trade, okay. But for anyone who wants to trade in options in BPCL, option strike price is value, option value is at 25 rupees today for BPCL. Lot size of BPCL is 1800. A 630, okay, 630 CE in BPCL is trading at 25 rupees today with a lot size of 1800. The total premium for this will come to 45,000. So if I want to take a BPCL buy trade today, premium for one lot in options is at 45,000. This is how high the premiums would be at the beginning of the month. The same BPCL, if I want to trade in third or fourth week, okay, it would be trading at a premium of, say, 6 or 7 rupees also. 5 rupees, 6 rupees, 7 rupees. This is the value at which it would be trading. Means how much? Approximately at investment of 10,000 rupees. So the same CE trade, when you see in fourth week, it would be available to you for trading at 1/3 or 1/4 of the present value. 1/3 or 1/4 of the cost. So which is a better approach? To take trade beginning of the month when premiums are as high as 45,000, or to trade more in third and fourth week when premiums are available at 1/3 or 1/4 of the value and take bigger profits. Less investment, more profits. Whereas on the contrary, on the other side, when you trade in BPCL by investing 45,000, even if trade performs, you get a 5%, 10% up move for that matter. It would go maximum 2x, 2.5x. It can double, it can get a little more than double, even if you get a 10% up move in first few days of the month. Option premium does not tend to spike much during first few days of a month. So there are a lot of factors which for you to consider to trade in options. When you have to trade less, when you should stay out of trading, and when to trade fluently or aggressively. Okay, so one is investment will be high in the first week. Even if trade perform, profit will be less compared to the value of investment. During last 15 days, that is third and fourth week of every month, your investment will be less. If you get a 5% or 10% movement in the expected direction, your options tends to become 3x, 5x, 10x. This happens during last 15 days of the month. So this is first one standard knowledge and approach what you have to build for yourself and train and prepare yourself mentally. Okay, so we will increase the frequency of option buying trade from second week onwards and then take aggressive trade from third week. Every month, good profits with low investment can be made in last 10 to 15 days of a month. You go through all our trades, okay, all our trades, all my trades, if you go through and see how I book profits in every trade, and when I am more active in options trading in which I make bigger profits, you will understand. Okay, you just need to back test my trades and understand. You will get a good idea about it. So for first 15 days of the month, premiums will be very high in the money, at the money options. Yeah, you have one option here. I mean, you can adopt one method. if you compulsively want to trade and you are pretty sure about certain trade performing within first 5 days or 10 days of a month, you can trade in OTM options, out of the money options. Because out of the money option, premiums will be less, risk will be less. If trade perform, you will get profits. Trade doesn't perform, your loss will be lesser. Okay, I'll come to that. See, this I'm telling is an exception. I'm not suggesting you to do it. Best approach would be that you do not trade aggressively in first 15 days. Only once you practice trading and fluently, comfortably able to do, probably at a later stage in your options trading career, you can adopt this method of trading in out of the money options for very few trades. Okay, I'll come back to this later, or probably I'll explain you this as the session progresses. Okay, what exactly happens? Why are we saying that do not trade more in first week of the month? In first week of the month, what happens is premium decay will be very high. As I said, even if the trade performs in our expected direction, options does not deliver desired results in first week. Premium decay will be high. If stock becomes sideways, this starts decaying very rapidly. Premium adjustments happen. What is premium adjustment? One day the price of stock will move 2% up. Next day it will move 2% down. Again it will move 2% up. It will move 2% down. This range bound movement of price is usually done to decay the premiums and adjust the premiums to its intrinsic value. Okay, options always has to reach its intrinsic value, then only the trade and options will start performing and start giving profits. So we have to wait till a stage where every trade, every option reaches its intrinsic value, lowest value possible, and then we have to initiate a trade to capture good profits when the move starts coming into the markets. Okay, see, options premium adjustment, I'm telling you, even if stock moves in a direction of trade, many times you would see option price may not move. It can, premium can even become less. Even if your cash trade is performing, if your trade is performing on cash chart, option may not move. Option can stay as it is at the price where it is. This is exactly called as option price adjustment. This predominantly happens in first week of every single month. Okay, guys. So best approach would be to take very less trades in month beginning in option buying, specifically for first 5 to 7 days. If you enter trades, option trades in first 5 to 7 days, make it a point to book profits same day or maximum by next day. Beyond this, do not carry any position. You will be required to re-enter at lower premiums very frequently when you are trading in first week options. You have to enter, book profit, again enter at lower premiums. This is how stressful it can be for trading in first 1 week in options. If you don't follow this, you will not make money. If you want to follow this, it will be more stressful than trading during end of the month in options, because you have to take multiple entries. Yes, whereas for first 10 days of the month, one can concentrate more on cash trades or future trading. Future traders will do. People who have bigger capital, their focus, they will do future trading in first 1 week, or option selling is also good for first 1 week, because options will be at very high premiums. You will get higher value premium to sell and encash those premiums in option selling. When premiums are high, do option selling. When premiums are low, do options buying. Or for first 10 days of the month, focus on cash trading and futures trading. People who have bigger capital, they will not have any issue. They will do future trades. For people who aspire to trade with smaller capital in options, okay, you have to divide your capital. One portion of capital only you have to allocate for options, and you only trade less to make bigger profits. That's how you will be overall successful in options trading. So my entire effort is to help you understand that you have to trade less in first 1 or 2 weeks, and then look at trading more during third or fourth week. That is the summary of all these explanation. You can repeat the videos multiple times and understand the concepts very clearly. Okay guys, see now I will show you some trades because I want to drive this point into your mind very clearly. I do not want any trader to have any difference of opinion in whatever I'm communicating. Okay, to help you understand, we will take recent trades and just help you measure the performance of trades. Okay, let's take one after another. Recent trade, which I've taken, is a Hero Moto. I've taken a sell trade in this. So please see this is a cash chart, and on day chart I've already told you that for positional trades, minimum time frame what we will see is a day chart. Now Hero Moto, you see stock is in a uptrend, nice uptrend, and we have taken a sell trade here as per our technical analysis and trade setup. We have taken a sell trade at these levels. Okay. Now, first time when I took Hero Moto trade was here at this level. I took a 4,000. Price is trading at 4,900, around 4,900. So I was expecting a fall till 4,600, and I took a position in 4,600 PE. Okay. At the date, the first entry when I took was around 12th of a month, 12th of Feb. 12th of Feb means what? It is just beginning of second week, or I must say, sorry, it is the end of second week and beginning of third week, right? In a calendar month when we take, it is almost fag end of second week and beginning of third week. This is when the first entry got triggered. So still we are at 12th of a month, mid-month, 4,600 PE in Hero Moto was trading at 50 rupees. Lot size 300. Means it is an investment of 15,000 rupees for me in one lot. Fair enough, 15,000 is also not such a high value. So I entered the trade and the trade worked in my favor. This 50 rupees became 90 rupees in this fall. In this fall, after my entry, 4600 PE Hero Moto, from 50 it moved to 90. So an investment of 15,000 rupees, I managed to earn some 13,000 rupees profits. Okay, means the 15,000 became 28,000 because the trade performed, and I booked my profits because it was just beginning of third week. I booked profit. I did not hold the trade. What happened? Again, the price retraced, came back to same level. Again, I initiated my sell trade here. Now here, check the date. It is 19th. Price at same level, but I'm getting entry after another 1 week. Now, at first entry, price was 50 rupees. Now, after 1 week, this 50 rupees has become 15 rupees in options. Same 4600 PE has become 15 rupees because it is 19th. Almost it is end of third week and beginning of fourth week in this calendar month. It's almost the last part of the month, and hence the premium is available at very low price. Say investment of 4,500 rupees in one lot. Here I took my entry and held my trade for few days. What happened? It started performing and it gave a good 9 to 10% fall. This 15 rupees went on to become 150 rupees. Means what? How much? 15 became 150, 10x. 10 times money multiplied on the investment in an options buying trade. This is the kind of immense profits what you can generate in options buying trade if you learn and execute trades with right approach. Options buying is a great wealth generator if you use it in a correct way. If you do not trade in proper manner, your entire investment can become zero. Your entire capital can become zero. That's the risk in options trading. Either it can become zero or it can give you immense profits. It depends on how you involve, how you adapt yourself to trade correctly into markets. You have to wait for lowest possible price, then enter trades and generate these kind of profits. Right? See how beautiful the sequences match. Exactly the method what I've told you. Do not trade more during first 10-15 days. Okay, say from third week you can start becoming active. Until month end, last week is the best time to do aggressive options buying trade because every stock will have lesser premium. And if trade perform, you will end up making money come what may. Some trade you may make 2x, some trade you may make 3x, 5x, 10x. Trade doesn't perform, you will have the option of exiting with very small loss as your investment itself is small. Suppose 4,500 investment in this trade. If my trade doesn't work, probably I will exit with say 1,000 loss or 1,500 loss, which is not a damage to my trading capital. Right? This is how you need to understand. Your loss value has to be smaller. If trade performs automatically, profit value will swell and multiply by many times. Clear, guys? Following? Okay, let me go on to next trade. So I'll discuss many number of trades so that this concept gets imprinted on your mind very clearly. Okay, next I'll go to recent last example, Bajaj Auto. This is also similar kind of trade. Okay, this is even more beautiful, but this is even more beautiful, but similar kind of trade. Yes, Bajaj Auto in a bullish trend. Okay, again in this we took our first sell entry here, which is on 20th. You see the date, 20th. This was my first entry. Price was around 8,500. I was expecting a fall, so traded in 8,300 PE. Which was trading at 120 rupees. 8,300 PE. When I entered here, it was at 120 rupees. After taking the trade did give me profit. This went up to 180 rupees. I booked my profits, exited. Okay, because stock was showing some support here, previous strong level. I monitored and booked my profit. Again, I got entry at the same level, fag end of the month. 28th of the month, I got sell entry. Market was on sell. I got my sell entry. Here, the same 8,300 PE, which was trading at 120 rupees on 20th, on 20, okay, on 20, dated 20 of Feb. Now on 28th of Feb, the same 8,300 PE was trading at 40 rupees. You see, in 1 week, the price has decayed from 120 to 40. Means what? It has decayed by another 1/3. It has decayed by 1/3 of its value in just 1 week time, although the cash price is at this same level. Bajaj Auto in cash was at same entry level on charts, but option price is different. This is exactly what I want you to understand. Guys, the same strike price, okay? Value will be different on first week of a month. It will be at the highest premiums. Value will be different on second week. Value will be different on third week. Value will be different on fourth week. You have to start understanding these differentiation, how premium moves. As the month progresses, as the days progresses, options premium will keep coming down when the price is at same level. So what happened here? Now let me continue the trade progress. So price started falling and I managed to get my entry at around 45, 50, 55, around 55 rupees. I managed to get my entry into trade. Okay. And I got the desired fall. Since, see, the stock did not fall much. Okay. It was a very decent small 4-5% fall. But since it was on almost on last day of the month, okay, there was still one more day left for the expiry. 29th was the expiry. 28th I took my trade. This went up to 390 rupees. Just one day. Even though the movement was small, the fall was around 4.5% on cash chart, which is not a great movement. It's definitely a big movement, but not a massive 10, 12, 15% movement. It is a normal 4.5% movement. But for this 4.5% movement, options multiplied almost by 9x, 8x, 9x. 8x, 9x in just one day in a 4.5% movement. This is the beauty and effectiveness of option trading in last week. If you manage to catch trade which can give you 4 to 5% movement in last few days of the monthly expiry, you will be able to get 5x, 6x, 8x trades. The same effort if you put in first week, even if you get 10% movement, you may get 2x, max to max 3x only. Okay, most of the time it will be around 2x or 2.5x, 2.5x. Here, so see, price what you got at 20th was totally different, and price you get at 28, 27, 28 will be much lesser. So these are the times to be very active in options trading. You will be able to catch bigger movements with lesser risk and bigger profits. Okay, one more trade. Conquer. Conquer, we managed to get a sell trade entry on 27th. 27th of a month. You see my entry around 1000 rupees. It gave a fall till 960. Means what? Again, it's a 4% fall. Okay, it's a 4% fall from the entry level. Options was trading at 970 PE. Trading at 3.5. Value became 21 in this fall. In this 4% fall in Conquer, 3.5 became 21, means almost 7x multiplication. Again, see the period. It is last week of the month. Make this observation. 7x multiplication for just 4% fall in a trade. Okay, let me show you one more trade. Three cement. Three cement on 20th. Okay, I initiated a trade on 20th. It gave almost it was a 5% up move. Okay, 1500 points up move on cash chart for a stock price of 28,000 or 26,500 when I initiated. It's a 5% movement. Free cement. This movement gave in options 27,500 CE went up from 100 rupees to 900 rupees in one day. Okay, on cash chart, as the price started moving, options started moving and 100 became 900. Again, it's a 9x trade. And see, when are we getting all these trades? It is during the last week of the month. You're not seeing any of these trades during first week of the month or first 5 days of a month. The big trades, I'm talking about the big trades. Okay, so we are focusing in swing trading, in options trading, you will be able to make money only when you get a good swing. That swing targets can come in 1 day, can come in 2, 3, 4 days also sometimes. But you have to get a full movement, full 3, 5%, 10% movement in one stock, which will deliver massive profits. You start making your observation on all the charts. Okay, take all the charts one after another and see what usually happens during first week of the month. During first week of the month, what you usually see? Stock will be sideways. If stock is sideways, will you make money? No. See, sideways. This range bound or sideways movement will not fetch money in options. This kind of trend has to come. And this trend usually comes in last week of the month, after 15th. That's when you have to become active as an options buyer. Go to any stock and start checking. This is the trend you will find overall. Okay, guys, and keep on mind, whatever concepts I'm teaching you will hold good for 80% of times. All concepts which I teach you will hold good 80% of times. Why I'm saying this? Yes, some of you may come back and tell me that in first week, XYZ stocks has moved by 5%, 10%, but you said stock does not move in first 1 week. No, it is, I don't mean to say that. Okay. What I mean to say is majority of stocks will remain sideways, and even if cash charts perform, options may not give profit. Okay, yes, 20% of trades will still give you profits in options in first week also. Okay, that's why I'm saying 80% will hold good. This concept will hold good for 80% of times, 80% of stock, 80% of time cycle. Or the 20% of stocks will still perform in first week. But see, being beginners and newcomers, think which approach you want to have for yourself. You want to be smart in going along with overall trend of markets which works 80% and concepts which work 80%, or you want to be a superhero by trying out when odds are lesser in your favor. If you take 10 trade, 2 may work, 8 may not work. 80% in your favor, you take 10 trades, 8 trades will work in your favor, 2 may not work. Now you decide for yourself how you want, what kind of trader you want to be. Okay, markets will never be stagnant. It keeps moving. Stocks also will give moves here and there. Yes, the best tried and tested systematic approach is what being taught to all of you. Okay, now let me tell you, I'll show you few trades which have taken at the beginning of the month also. It's not that we do not trade, okay? But we should be successful in catching those correct trades. See, Baj Finance sell trade I discussed in previous videos, right? That I had taken a sell trade below 200 moving average. Now see the kind of movement this has given. From 7,200, it has fallen to 6,500. Means it's a movement of 10% fall from entry levels. You should be successful in getting this kind of movement after you enter trade. If you have developed the skill set to enter trade which can give this big movement, then you will make money in options. So this trade also we traded in out of the money option. Price was 7,200, we entered in 6,400 PE. because we had forecasted 10% fall in this, and hence we traded in 6,400 PE, which had a premium of 30 rupees. So 3,000 rupees was the investment. So you have to adapt yourself like this. If you're going on month beginning trade, you should have the conviction in your trade. You should be ready to put your money in out of the money trade. Risk will be higher. If trade does not perform this big, then you lose this money. If trade performs well and good, you will make money. But yes, having said that, in spite of getting this big fall, I think 30 rupees went on to become 120 rupees, which was a 4x trade for us. Okay, understand. 30 became 120, 4x trade in spite of getting such a big fall, and the waiting time for number of days will be higher. 1, 2, 3, 4, 5, 6, 7 days. Almost 7 days it took to deliver this 4x profit in this trade. The same trade we re-entered at lower levels. Okay, we re-entered in a retracement as per our trading techniques, trade setups. We re-entered Bajaj Finance sell trade here in the same 6,400 PE. $6,400 PE was trading at 4 rupees here. 4 rupees. How much was the premium here when we entered in beginning of the month? It was 30 rupees. You see, fag end of the month, same 6,400 PE at lower levels. Okay, not even original levels. At lower levels, at our entry levels, it was available at 4 rupees to enter a trade. We entered this. This went as high as 28 rupees. So again, emphasizing on the beauty of trading in last 1 or 2 weeks in a month. This 4 to 28 means it's a 7x multiplication on the invested money in options. And fall also was not that big, you can see. Price gave a fall from 6,700 to 6,400. It was a 4% fall. It was a 4% fall, but profits in options was 7x. Whereas here it was a 10% fall. Profit in option is still 4x. See, I'm not taking away this feat at all. In fact, doubling money in option itself is a big achievement in markets, right? Doubling your money in options is a big achievement. I am talking at higher levels of achievement. For me, when compared to the 7x profit for a 4% fall, this is bigger than 4x profit on a 10% fall. This specifically happens because options tends to give lesser profit in buy trades, option buy trades in month beginning, and higher profit during the month end. This is how options behave specifically every month. All right, so one more trade. I'm running through a lot of trades so that this concept becomes very, very clear to you. Shriram Finance sell trade. Okay. See, we selected this sell trade because it was at previous resistance levels. I've already explained you. Any level at which a fall has originated will have a sell memory. It becomes the resistance levels. So we again selected this for sell trade at same levels. First entry was on 19th. in a Shriram Fin sell 2300 PE. We traded, and from 10 rupees, it moved to 25 rupees. Okay, Shriram Fin premium from 10 rupees, it moved to 25. We booked one round of profit and exited. This was on 19th. First entry on 19th. We again took second entry. When? 27th. After 1 week. Price retraced at same sell zone, selling levels. We entered here. Guys, open your chart, option value, and see on this 27th, price had become 2 rupees. And this fall, we got a big fall after our entry. From 2 rupees, it went as high as 70 rupees. This became 35x. This kind of huge money multipliers are possible only in options buying. 35x. Able to correlate. Price premiums change every week. The more trade you do in later part of the month, higher are the chances that you will be able to capture at lower premium and earn higher profits. The first trade you can take, you can book profits. Using same profits, you can invest again in second entry of the month, which comes in the last week. You are not risking your capital, correct? Using the same profit in first trade, that profit you invest in this, you capture the entire money. That's also a very good approach to have. Do not risk your capital. You only risk your profit earned. You earn profits, you risk that profits and see if trade works in your favor, take the profits. All right, guys. So see, market, we majority got a sell trend. Okay, let me show you one more buy trade. Just to explain when exactly you can expect the movements in market, the phenomenon of price movements. LT we took a buy. Okay, LT we took a buy trade at breakouts. This breakout also, you see when it has come. Almost the price started moving only after 25th of a month. This up move trend has started. What happened in first half of the month? See the phenomenon. You got one movement here. After that, almost from 1st of Feb till 25th of the Feb, okay, in first entire 3 weeks, price is range bound. Can you make money in options trading if price remains range bound? Not at all. This is exactly why most of the retail traders do not make money in options trading. Guys, see price, you see, okay, let me explain. Price has given up move from this level, right? This is the level from which price has moved. When did LT reach this price? Price has reached in first week itself. It has given a fall and reached in first week itself. Just because the price reaches some buy zone or buy levels does not mean we need to enter an option trade and just sit and wait for entire month. No, this is wrong. You have to time your entry. Exactly when the price starts moving up, that is when you have to enter option buying trades. See, level is different, correct? Trading level is a different topic. Entering a trade at correct time. Timing is all which matters and makes a differentiator between a successful trader and a non-successful trader. One who developed the skill to enter a trade at correct time when it starts giving up move, he's the one who is going to have an edge over all other traders in market, and he's the one who will make money in the markets. You need to have that superior edge, superior skill than those hundreds and thousands of traders who are out there in market trying to make money every single day. So price reaching a level does not require you to initiate an options trade. For cash trader, it's fine. For a future trader, it's fine. They can buy and hold for 10 days, 20 days, 30 days. You being option buyer, you want your trade to perform in 1 day, 2 days, 5 days. 80% of your trades has to perform within this time frame. That is when you will make money in markets. Any trade which is not performing beyond 5 days, I mean within the time frame of 5 days, 7 days, 7 trading session, you will not make money. Exit the position, book your profits. Because I've shown you every week the premium changes. Even if the price is at same level, every week one small move against your direction can reduce the premiums to a large extent. Okay, guys. Fine. So now we'll move to the next topic. Now you need to understand the importance of trailing stop loss in your trades. Okay, these are few rules which we consistently follow and which you should definitely follow as a trader. There are two parts in which you need to understand stop losses. Okay, stop losses will be of two types. One is technical stop loss. One is money management stop loss. Right, these two are different aspects of trading. One is technical, one is money management. You need to understand both and systematically implement in your trading. Now, when I say technical stop loss, okay, if you are given an example of say BPCL trade, which has a trade which comes onto a trade setup for buy, and buying levels will be 400 with a stop loss of 395. So when you get a trade setup for buying zone at 400, stop loss at 395 for targets of 405 and 410. All right. Now, when you see a buy trade, enter only at the entry levels, okay, as per our trade setup on methods which you are taught and trained in previous videos for intraday or positional. buy at the given levels. Okay, as per our trade analysis, wherever forms a buy, we need to enter buy only at those levels and not at higher levels. You see what is your buy zone, you see what is your stop loss. Buy only in this zone. And if possible, lower price closer to stop loss. Now you know buy, you know your stop loss. If you are getting at lower price than your buy area closer to stop loss, take it, no problem. Because the closer you enter to the stop loss value, risk in the trade will become that much lesser. If you enter at 400 with 5-point stop loss, if stop loss hits, you need to book 5-point loss. Say suppose price gives a dip and you are able to take entry at 396. When you know 395 is your technical stop loss as per technical levels, if you are getting entry at 396, take it. Why? If you enter at 396, your stop loss will now be just 1 point. Correct? You go on a chart. Okay, now I'm giving a classic example, right, with a candlestick example. Now you go on a chart. You have a technical stop loss. You have a buying zone. You have your targets. Right? Now, buying zone becomes 418 with a stop loss of 405 or targets of 440. Now, when you know this is your technical buying levels, if you get the price on dips closer to this, closer to stop loss level, you are getting entry at 406. If you are taken at this zone, if you had initiated your trade, you need to probably exit the trade if price goes below this. You will book some 15-point loss as your stop loss and exit the trade with loss, right? Now, for the same trade, if you're getting an opportunity to enter at 406 or 407, which is closer to stop loss value, and then go for an upside opportunity. Now, what is the risk in that trade? Stop loss will still be 405. So, if you enter at these levels, your risk of stop loss will just be 1 or 2 points. Whereas your rewards can be big if trade works in your favor. Your rewards can be 30, 40 points. So this is how you need to smartly fine-tune, train yourself to enter and look for trading opportunity at small stop loss levels whenever possible. Whenever possible, you do this. It may not be possible for all trade, but whenever market gives opportunity like that, do it. Right? To enter in this zone at lowest possible price close to stop loss with a small stop loss, take the trade and look for upside movement. Now from entry level, stop loss hits, book loss and exit strictly. Book small stop loss and exit as per rule. If stop loss hits, we have to book loss and exit. There's no thinking, no stopping, no asking anyone else, can I exit? Nothing like that. You are trained, you are taught on how to trade. You know the risk before entering. If you feel risk is okay, only take the trade. If you feel risk is big, risk of stop loss is big, do not enter trade. That decision also you only have to take. Your trade, your funds, your money, you're the best person to manage. Guys, remember this. No one will help you in managing your finance better than yourself. You have to decide for yourself what is the risk I can take in my trade and participate in markets accordingly. All right, so only stop loss hits, you will exit with loss. If stop loss doesn't hit from entry level, if price starts moving into the expected direction, okay, you would have entered at 400, 399. It starts moving up towards targets. First target 405, second target 410. So as the price moves up, you need to now shift your stop loss value to cost. From entry level, after price moves up in the expected direction, now you cannot sit with original stop loss. The moment price moves up, you have to shift your stop loss to cost price. Whatever is your entry price, shift your stop loss from 395 to 400 cost price and sit. This is responsibility of every trader for yourself. Either we tell you or not, you have to do it. Do not expect anyone to guide you in live market because there'll be no time to do all this in live markets. When you're putting money, you have to do it. It is responsibility of a trader to do it. Right? You will not have time to execute your trade, then go back to your mentor and ask, sir, can I exit this? It's in loss. No. The moment price moves up, first duty, shift your stop loss from original value to cost and make sure the trade is risk free. If trade moves towards next target, shift your stop loss to one more step. This is exactly called as trailing stop loss. As the price keeps moving higher and higher, you need to shift your stop loss value also accordingly to the higher price. Like this, you trail your stop loss and keep locking your profits. As the price moves higher and higher and higher, trailing stop loss value also will keep getting shifted from your end. It has to keep getting shifted. Keep shifting step by step. Candle by candle, you keep shifting your stop loss. At one certain point of time, price may reverse and take your trailing stop loss. Fine. You will book a good amount of profit in every trade if you follow this method. Okay, guys, you have to do this. Any trade, you take a buy trade or a sell trade, you have to do this. It can be for intraday or positional. Same concepts to be followed. Trading concepts are same. It can be for intraday or positional. Intraday traders will do for 5-minute candlestick. Positional traders will do for day candlesticks. This will fetch you very good profits. These methods will fetch you very good profits. See, Tata Steel, this is a 5-minute candlestick, right, for intraday trade, which we use. Now we enter Tata Steel buy. Once we entered buy trade, price started moving up. Now when we enter, we'll keep a small stop loss below first candle low. This will be the original stop loss when we enter the trade. Any trade we enter, there will be an original technical stop loss to enter the trade. From entry level, once price has started moving up higher and higher, once price has reached these levels, now we will shift our stop loss to cost and then hold it. Why it's important to do is after price giving up move, sometimes market can reverse and go down below your cost and hit your SL also possible. Okay, sometimes or many times it can happen. So what happens if you do not shift your stop loss to cost? Even though the trade has given profit from entry, it will go below your cost level and hit your stop loss, and you will end up booking loss in a trade which has actually given profits from your entry. Avoiding this is your responsibility. Putting stop loss to cost after trade moves into profit from entry level is your responsibility. Please practice this 100 times, 500 times if required, till the time it becomes a sure shot habit for you in trading. Guys who have practiced a lot, who are consistently profitable, you want to just, you are okay to take the risk of this hitting your original stop loss. It's up to you. Okay, that traders will decide as per their risk appetite. Once they grow ahead in their trading careers, they will start taking such risks, but not the beginners, not the newcomers. Newcomers have to follow these rules. So that's what I said. These are money management rules. Technical stop loss will be effective when you enter before giving an up move. If price hits stop loss, here it becomes a technical stop loss hit. Technical SL. But once price moves up, then we shift our stop loss to cost. This becomes a money management guidelines. Money management guidelines to maintain your trade profitably, to maintain your capital in a positive zone for as long as possible. Guys, why it's important to do this? As traders, you will take a lot of time to develop and mature on system. Okay, on an average, I've seen most of the traders become stable only after spending 2 to 3 years in markets. After learning important concepts and good knowledge from skilled mentors or trainers, you will take time to practice them and implement them in your trading. You will take certain duration to practice and implement all these trading concepts. So you have to survive in markets till such a time without making major loss in your trading accounts. So only people who go on for long time, okay, who are successful in spending 2 to 3 years plus in markets tend to usually make a good progress. If anyone is promising to make you a profitable trader in 2 months, 3 months of you just beginning market, it's a lie. Please do not take them on face value. Nothing of such thing happens. Okay, just to understand price movement on cash charts, people take 1-2 years on an average, because most of them may not be full-time traders also. Most of them may be job goers or people engaged in business who start off market trading as part-time hobby or occupation. It also depends on how much time you're willing to give into markets. So coming back to trailing stop loss, any trade which moves into profits, shift your original stop loss to cost and hold it. When you practice this, what happens? You shift to cost, you shift your cost, okay, stop loss to cost and hold. When you get a good trend, you will enjoy this profits unlimited. You can also keep shifting your stop loss stage by stage. Okay, you shift your stop loss to part profits. Once you get higher profits, you can lock your profits at this stage. Once you get more profits, next you can lock your profits at this stage. Like this, trail your stop losses step by step for bigger gains in trading. Positional traders will do it on day charts, right? Using the concepts I've taught in the first session, they will trail the positions on day charts. Suppose you take an IGL sell trade here as per our trade setup. Above this, you will maintain a stop loss. Next day, you will watch for price action. Next day, so they will keep shifting their stop losses day by day. And keep taking profits as per the price action. As the lows keep getting shifted lower and lower on day chart, they will keep trailing. Any day they see a reversal, they will capture these profits and their trailing stop loss hits, and their positions will get booked in profits with trailing stop loss. Anytime they see a reversal, they would have enjoyed these profits and book out the profits. So guys, enter trades at correct levels. That's very important. Okay, enter buy trades or sell trades at given levels as per technical analysis on your charts. Whatever trade setups formed, whatever your chart shows where it forms a buy zone or sell zone, enter at same levels. Do not enter trade if you miss entry into any trade levels. Suppose you want to take a buy trade, by price has moved already beyond the entry point considerably. Do not chase any trade, because if you choose to enter late in a trade, your stop loss will still be same. And just because you are entering late into a trade, you cannot keep a smaller stop loss. Technical stop loss will still remain same. Entry had to be at a certain levels. If price has considerably moved from entry levels, let go of the trade. Leave it. Let it go. You wait for next opportunity and then you take your trade. If you enter trade in between, your risk in a trade will be bigger. Stop loss value will be bigger. Probable profits will be smaller. So in all parameters, it is a losing situation for you. You're not going to gain much from these such entries, abrupt entries. Right? So in a sell trade also, enter a proper sell zone and capture the profits, of course, with the risk of stop loss in every trade. If you see any price falling fast and it has moved quite far away considerably from entry levels, let go of it. Do not enter trade which has already moved significantly, because the remaining profits is smaller. And who knows, price, if you choose to enter here and if price reverses and it goes all the way to your stop loss and finally it hits your stop loss, you will end up booking big, huge loss. Think of the risk in every trade before you enter. Any trade you enter, you should know what is your stop loss. Stop loss in terms of value. Only if you are okay to bear the risk of loss, enter the trade. Okay, only the small price difference is okay. Okay, small plus or minus fluctuation, you can enter. Because always dot entries may not be possible. Small fluctuation plus or minus is fine. You measure in terms of value. A small value difference of 1,000, 2,000 is okay to enter. If it is difference of 5,000, 10,000, no, not to enter. 500, 1,000, 500, 1,000, 1,500. Okay, in terms of value, if you find a difference, small difference, then you can enter. And any trading methods which we have taught, and you are entering the trades before 9:30 a.m. Okay, please remember this, market will be very volatile between 9:15 to 9:30. Yes, it is a golden hour for trading. Golden time for trading, because market will be very volatile. You can make huge profit in this 15 minutes. But that can be done only by people who have learned, practiced, and are able to execute the trades fast. You need a lot of practice to enter the market in this time. So people who have practiced a lot will enter and trade. People who are very new into market, you are yet to learn the skill of executing trades and booking profits or stop losses very quickly in a short amount of time. If you are very new, do not enter such trades. Okay, wait for a few months. Practice. Initially, you practice how to trade in first few months of your joining us. Then you can choose to enter these trades, which comes before 9:30. So all these will be basic rules which you have to list it down, practice every single day, every single week. You need to reach a level of stability where all these points sits on your mind very clearly, right? So first get used to the trading methods, then only start trading. And very importantly, guys, first do paper trading. All the methods which are being taught are meant to be executed on paper trading or virtual trading only. We never recommend, or none of these trading methods are recommended to be done in real money. First, do in paper trading and keep sharing your results to us on a daily basis. Okay. Once you reach a level of stability where you gain the confidence, yes, now my paper trading results are profitable. Now I am good to go to put real money and trade. Then you can start deploying small capital. Say initially you deploy some 20,000, 25,000, 50,000 only if your results in paper trading are good, if you are confident of trade executions correctly, and in paper trading you are seeing money consistently, then only start trading with real money. Because it's quite evident that if you are not able to make money in paper trading, you will not make money in real trading also. Correct? Just check all the results on paper trading. If you're convinced you have gained requisite knowledge or skills to make money in paper trading and it is showing you results on paper trading, then you decide, it's your decision to go on to trading with real money and start actively trading in whichever segment you want, that you decide. Because traders will have different risk appetite, different capital, each one will have capital differently. So some may prefer to do in cash, some may prefer to do in futures, some may prefer to do in options. Options buying has specifically given you guidelines, and moving on, giving you money management and trade guidelines further. Hey guys, so this is another rule to be implemented systematically, gradually. See, we are there for you for support right round the clock. Okay, at all times, not in live markets, but after market hours, we are reachable. Mentors are there who can assist you. You can request and assist and seek guidance for time with mentors if you need any specific guidance. So all trade executions to be done on paper trading and results has to be shared on a regular basis to mentors. Regular means daily basis. If you're an active trader, you have to share it daily, show results, then only you will get the required support. Without following our guidelines randomly, please never expect any kind of answer from our side. You have to come into the learning curve. You have to learn, follow rules, practice these methods. Okay, we are covering contents over various videos. Keep repeating them consistently till you gain mastery on these subjects. These are to be practiced very consistently. You may have to practice it for 1 month, 3 months, 6 months, 1 year, right? Where over various topics. Once you are comfortable, then move ahead. Okay, so there's one more guidelines what we want to share. Okay, one more set of guidelines, what I mean, which we want to share. People mostly have a conflict of thought process when it comes to allocating money for each trade. They ask us, sir, how do you actually do it? How do you take your trades and consistently, confidently, how you are able to do that comes with simple approach of allocating equal size of money into every trade. Okay, when I mean option trading, we personally invest same value into all trades. Okay, as an example, if you are investing 20,000 into one trade, every trade you should invest 20,000 only. You can't choose to invest 10,000 into one trade, 50,000 into another trade, 1 lakh into another trade, because you feel XYZ trade will run for sure. You will have some strong conviction. You will decide to invest 1 lakh rupees in a trade. Some trade you want to take, but you will not have such strong conviction, so you decide to invest only 10,000 rupees in that trade. This is wrong, absolutely wrong. You should never be doing this. You practice on the trade setups thought. Once you are confident of executing on the same trade setup, you start investing equal amount into each trade with stop loss and targets. So what happens? You take a trade, invest 20,000. In options, if stop loss hits, you may lose 5,000 rupees, right? It's all our trading methods are very precisely focused on risk to ratio reward. We take trades at very small risk, but still I'm saying if you invest 20,000, maybe you take a loss value at 5,000 rupees maximum. If stop loss hits, book this loss and exit. Now, when trade runs, what happens? You have to invest at 20,000. If it performs, this 20,000 will become 40,000 if it gives 2x profit. It can become 60,000 if it gives 3x profit. It can give 80,000 if it gives 4x profits, right? And so on. If it gives 10x profit, it will become 2 lakhs. So when we take trade, there are two possibilities. One is it can hit stop loss. You have to book loss. But loss value has to be fixed in every trade. You have to take your position planning this loss value. First of all, when you enter a trade, check what is my maximum loss value and you have to plan accordingly. You have to plan your position. For a trader who wants to invest 20,000 rupees, this will be his position sizing, right? 5,000 rupees is maximum loss value. You have to book 5,000 loss and exit. Nothing, no thinking beyond that. For trade which performs, it starts performing like this. If it gives you 2x, 3x, 4x, it will keep multiplying. By having this standard approach, overall you will be a net profitable trader. You take a set of 10 trades. Okay, you take a set of 10 trades. Now in these 10 trades, let's assume 3 stop loss gets hit. In every trade, when you invest 20,000, where you have a trade setup with loss value of 5,000, what happens? 3 stop loss hits, No problem. 555, 15,000 stop loss in 3 trades. You book minus 15,000 loss and exit overall. Okay, I'm talking about overall outcome for a set of 10 trades, where I'm saying 3 stop loss will get hit. Now rest of the trade, other 7 trades which gives profits. One trade which becomes 20k to 40k just at 2x will win back the money of 3 stop loss trades for you. Guys, this understanding of money management is very, very critical for preparing yourself psychologically. This is what trading mindset is all about. Making loss and profit is part of the game. There's no trader who can say, I will make only profit, I will not make loss. No, loss will be part of trading. But there has to be systems and fixed rules for it. What is the maximum stop loss value? You have to define, you have to follow it. And you have to continue trading. You can continue trading only if you have a fixed mindset, you have a steady mindset, you have a mindset to accept loss. You take trade number 1, 5,000 stop loss, book it, participate in trade number 2. You should not stop trading, right? You have to continue trading. Always evaluate your performance after a set of 10 trades. Take 10 trades, see how many stop loss are getting hit, 3 stop loss, 4 stop loss, no problem. Book 5,000 loss, exit. Trade which performs, which becomes 2x, 3x, 5x, or which become 1.5x also. Okay, even if it becomes 1.5x, from this investment of 20,000, you will be earning 10,000 rupees profit, which is still 50% returns. Your loss limit, to keep it at 25% in a trade. Your profit booking, you keep it at 50% minimum in a trade. Beyond 50%, you can keep trailing your positions. Some may become 2x, some may become 5x, some may become 10x. Right? So overall, when you practice this, there's no possibility that you will be a net loss trader. Only if you have a situation where you take 10 trades, okay, you take a set of 10 trades and all 9 to 10 trades are hitting stop loss, only then you will be a net loss trader. If you have an outcome where out of 10 you are having 5 stop loss hit and 5 profits, here also you will be a net profitable trader. You will not be a loss making trader, because your 5 stop loss hit value will be 25,000. You have a maximum risk defined, maximum loss will not be beyond 25. In this five profitable trade, 1 or 2 trade will win back this loss value for you, and the other 3 trades out of this 5 profitable trade will keep you net profitable. So even if your outcome of overall trade is like this, out of 10 trade, 5 SL hit, 5 profit, still your profit value will be higher. Once you understand this simple mathematics, you will not fear trading in markets. This is the biggest problem for most of the traders, biggest challenge for most of the traders, not being prepared mentally and psychologically with the right understanding of mathematics. This is simple mathematics. You just redo this mathematics and you can seek our assistance if you need any guidance in money management. Specifically, if you have a bigger capital, you want more guidance, we can do it. Okay, but take all necessary guidance, do all this as told on paper trading. Okay, if you're getting favorable result, then switch over to real money trading as per your confidence and ability to take risk. So nobody will do like this. Okay. Trade number 1, invest 10,000. And when you invest 10,000, you will see some profits. Maybe you will book a profit of 5,000. You are excited. Then trade number 2, because you have made some profit, you invest 50,000 rupees. You will book 15,000 profits after investing 15,000. You are excited to see this 15,000 profit, but you are not seeing the percentage of profit. In first trade, after investing 10K, you have booked 5K. They are giving you 50% profits. Whereas in second trade, you invested 50,000 and booking 15,000. Here, you are taking just 25% as profits. Difference is already there. Trade 3, invest 1 lakh. I'm not even talking about outcome. This is totally a wrong process. Trade 1, 10,000, trade 2, 50,000, trade 3, 1 lakh because you are profitable. No, mathematics is going wrong. Rules is clear. Invest equal value in all trades. Keep strict stop loss value, same value of stop loss in all trades. By following this, you will not go wrong in money management. Your overall outcome for trading will be favorable. Okay, guys, we ourselves do not put entire money into one sure shot, high conviction trade. It doesn't work like that. Any trade can reverse anytime. In 10 trades, you never really know when that 1 or 2 stop loss can come. Putting your entire 50% of your entire capital into one single trade and trying to make huge money amounts to gambling. We never encourage such habits. If we see any of the trader doing like that, we will never respond to any messages, any request for any training session. No. Only people who follow our guidelines sincerely, who are really genuinely interested to develop as a trader, following all the rules of the game of technical analysis and money management together, will always be welcome in our family to continuously being mentored and being helped to sustain and develop as a successful trader. Okay, only you are responsible for the profits and losses from the actions what you take in your trading accounts. Nobody else, guys. No one can help you apart from yourself. You're the only person who can help yourself in maintaining profitability or in minimizing the losses which may incur in your trading journey. So never think you can blame anyone. Please do not follow too many telegram channel, take tips from tips providers. No, that all has to stop after you join us. After you joining us, you have to focus only on learning, learn, improve, practice, and become a profitable trader. Okay, be a responsible trader and maintain your exposure of risk under manageable limits. Exposure means what? Do not take loans and put it into a trading accounts. Do not borrow money for trading. Do not take funds from someone else, family money, and then put your trading. Don't do all those things. You want to trade, bring your money. If you don't have money, take your time, arrange that money, then only put money into trading, which you can spare it. Money which you put into trading has to be spare money on which you don't have livelihood dependency. It should not be money on which you depend for your day-to-day bread and butter and livelihood. To run your house, you should not depend on trading money. Right? So this you should keep your as an alternative source of income till you become a full-time skilled trader. This has to be your approach. All the guidelines what I'm giving is for beginners. This is the approach what you should have till you become seasoned, full-time, confident traders who are generating consistent profits from market. Then you can consider yourself as a full-time trader who makes a career out of this. Okay, again insisting and cautioning everyone, options trading, if not done correctly, can make your entire capital deployed zero in no time. So the money what you allocate for options trading has to be specific. If you have 1 lakh capital, okay, deploy only 20% of that into options trading. This is the maximum suggested. See, this can vary between individual. We are not suggesting that you have to do options trading, but since people join us to learn the skills of option trading, it becomes our responsibility to educate you on the importance of allocating a small portion of funds only into option trading and continue your journey further. Okay, a majority of your capital is still to be kept for equity markets. A small portion of your capital you can think of risking into options trading. If you are getting favorable result from paper trading, then you can think of risking your small portion of capital into options trading. So guys, bear for a few more minutes. Okay, so most of the contents has been covered for this video. Let me just check if I've left something else. Okay, so I've mentioned in writing here so that you can, it is there for a reference repeatedly whenever you watch these videos. It keeps coming your mind that do not become greedy at any given point of time. You may be making profit, but yes, keep your emotions under control. Allocate limited money for options trading. Okay, since this learning session is about option trading, money management is also important for understanding option trading. Now, apart from options, in general, if you are trading in futures, please make it a point to keep loss value fixed at 10 to 15,000 rupees maximum and profit potentials at 30, 50, 80,000 rupees in every trade. This is the trade setup on which you have to practice for swing trading and stick to it in terms of money management. The moment you exceed this loss value, cut it. People with a lot of funds, they prefer futures trading. There also this money management has to be followed. In other words, take trade only where you get at 10,000 rupees or 15,000 rupees as maximum loss limit. Your entry level stop loss value has to be 10 to 15,000 rupees from your entry level. Only participate into such trades. That will give you opportunity of being a very consistent trader, being able to generate favorable results. In stock options, keep your loss limit between 3 to 5,000 rupees maximum. Beyond this, no trade has to be kept active, or any trade which is having a bigger stop loss. Suppose you get a trade setup where stop loss risk will be 15,000. Do not even think of attempting it. Why you want to take such trade? I have now entire video I've explained you, entire session I've explained you the importance of trading in last week or last 2 weeks. You will never reach these stop loss values if you are following my guidelines. Okay, your stop loss will and can easily be restricted to these values itself. So practice this. Risk has to be small, rewards has to be big. This is how options trading has to be done. And for people whom we mentor in mastermind course, so for them also, you keep your nifty stop loss 35 point Bank Nifty stop loss at 100 points. There is a money management point of view for Nifty and Bank Nifty. From entry levels, what is being taught to you, 100 points stop loss should be for Bank Nifty, 35 points stop loss should be for Nifty. This is the money management guidelines. Okay, guys. So let me end the session here. Okay. Please go through and practice all that is being taught. If we feel any more inputs need to be given at regular intervals, we'll make more learning videos and share you at appropriate point of time if we wish to give any new input. Okay. So take care and stay in touch and reach out to us if you need specifically any other guidance apart from these contents. So see you guys. Take care. Meet you in the next learning video.